Welcome back, traders, to the channel. In this video, we'll be doing a deeper analysis on SOFI stock. We'll be looking at the financials, the fundamentals, and most importantly, the technicals, which will allow us to show if the stock is a buy or a sell. So whether you're an investor or a swing trader, you definitely don't want to miss out. First of all, let's begin here with the fundamentals. As you can see on my screen, we're on the tickerflow.app, which is completely accessible through our Patreon membership, which allows users to have the best fundamental research and technical research with the power of AI. Here you can see here we have AI insights that go deep into the research. We don't have to go through any other sources or news. And we see here, for example, that the majority of the insights here show important aspects about the company. In this case, SOFI. For example, we've seen that there's strong member growth, around 34% growth year over year, which is amazing here. SOFI did add around 800,000 new members in Q1 2025, reaching a total of over 10.9 million members. We can say 11 million, a 34% increase year over year. As well, we're seeing record revenue performance up 33% year over year. The company did report adjusted net revenue of $771 million in Q1, marking a 33% increase from the previous year. As well, something important to note here that they have diversified revenue streams, which is fee-based revenue, including loan platform businesses, as well interchange services, loan referrals, which are accounted for around 41% of the analyzed revenues as of the date of April 2025. As well, here we're seeing that their EBITDA is also growing. They're becoming more profitable. Not only are they growing on the top line, but they're gaining profitability by reducing costs as well. They're also seeing their EBITDA going up here, which was around a 46% year-over-year increase change here. And most importantly thing here is that they're now securing partnerships here. It was a $5 billion partnership with Blue Owl Capital in Q1, demonstrating strong demands for its loan platform services here. Now, the AI-generated investment thesis here is that SOFI's diversified business model shows strong member growth and strategic initiatives, which position it well for sustained long-term growth and profitability here. As you can see here, we get a little market snapshot of the current price. Currently, it's down on the day a little bit, less than 1%, which is not too bad. But we see here that the stock, seen around 10.7, million here shares in volume here. But the stock is up actually, 228%, over the past year, which is absolutely amazing here, outperforming right now the overall S&P 500. We can see here that, Tickerflow AI here allows, a deep breakdown of revenue. The segments, for example, we see financial services, which forms around 34% of the revenue here. And, it generated around 257 million here for SOFI, reflecting that 84% year-over-year growth here in the stock. As well, lending is a bigger part of the revenue, is around 53%, which is, did see as well 27% increase. And the technology platform was around 13%, was up 15%. So pretty much we're seeing here double-digit growth continued across all revenue segments, which is amazing to see. That shows that it's a growth company, right? Ever since, we see, a company that, declines in, the revenue growth, around less than 10%, then it's no longer a growth stock. It's just slowing down. And we generally want it to be above the rate of inflation, which is around 3% here in this case here. There's obviously here some risk factors, which you do include here on the Tickerflow AI app, so you also have to take into consideration the downside risk, right? So the risk management, there's a lot of, possibility for economic downturns, right? So a potential economic downturn could impact the loan growth and consumer spending, as we've seen in past years. There's also increased competition here. There's been, higher in the fintech space, right? Which does pressure, their market share. And there's also as well, I'd say the most importantly would be the regulatory changes, right? There's been changes in regulation, which could affect overall SOFI's financial services offerings. Now let's go here towards the financials a little bit more deeply here. So we see here the past 2 years of revenue. We saw that in 2023, they had around $421 million, Now in 2024 they had around $503 million, showing a 19% change, which is quite nice to see here. Their market cap is around 24 to 27 billion still, which is pretty young company. They're seeing 19% growth consistently year over year on revenue, which approximately now is around 503 million. And if you look at the projections here, right, without having to do any calculations or Excel, we see that we're seeing projected revenues of 2026 towards 600 million, as well as 2027 around 717 million here. So overall, a nice consistent uptrend here for the revenue, which is quite nice to see here in this company. Now, net income as well is expected to see a nice upward move, kind of exponential towards upside. So in 2029 and 2028, we do expect around $2 billion here in net income for the company. Now, something to note here on the negative side is that their free cash flow hasn't really been growing, right? There's been projections that they're going to keep, spending more here, and it's just not really good here for the free cash flow per share. But they do have a low gross margin of around 8%. But they do have 46% operating margin, which is growing at around 3%, a little bit higher than the rate of inflation, right? And something though to note is that the P ratio is a little bit on the high side, right? It's reaching around 50. The P ratio compared to the overall market right now, the S&P 500 has a P ratio of around 27, showing that it's overall overvalued compared to the market. There's more growth being priced in, right? I mean, especially look at the net income here over the next couple, 5 years, right? It's just absolutely incredible here for this company. Now let's look at the AI SWOT analysis. When doing a fundamental company and analyzing it, deeply, we always like to, analyze it from the SWOT technique, which represents the strengths, weaknesses, opportunities, and threats. And here we have it embedded within our app. As you can see here, for example, the strengths of SOFI stock. There is, the comprehensive financial services platform, which is a very comprehensive strength here for SOFI. They also seen, the strong member and product growth here over the past couple of years, and they've seen technological innovation and increased user experience. Some of the weakness here is outlined is that, there's high operating expenses, right? For example, the company did face challenges in managing operating expenses, with non-interest expenses increasing by 26%, which is not good here overall, impacting, like I said, the short-term profitability despite longer-term growth investments. They also have high dependency on the lending business, right? A significant portion of the revenue is derived from its lending segment, making it vulnerable to fluctuations in economic cycles and interest rates that can overall affect loan origination volumes and credit quality. So now that we're seeing that there's a overall rate cut being priced in on the stock, right? Now that we're seeing supposedly a priced in rate cut, we should be able to see why the stock has been performing exceptionally well, right? We're seeing the hopes of a rate cut, which will allow for more lending and overall economic growth here. And SOFI should be benefited from this overall rate cut. There's also regulatory risk, right? Overall, as a financial institution, SOFI has always been subject to extensive regulation and changes in laws or regulations that could impact the operations and necessitate significant compliance costs. Some opportunities, though, that they have here is that they have expansion into banking services, right? SOFI's transition into a bank holding company and the establishment of SOFI Bank presents a significant growth opportunity by offering checking and savings accounts, attracting new customers, and providing a more stable source of funding. They've also had strategic acquisitions and partnerships, right? The company's history of acquisitions, for example, as Galileo, demonstrates its commitment to expanding the technological capabilities and service offerings, with future acquisitions and partnerships potentially enhancing its product portfolio and the market reach. As well, I'd say the market expansion is the most importantly here for SOFI. Now, the threats, like I said, the competitive landscape, economic uncertainty, and cybersecurity and data privacy concerns here for the company. Now, let's even use our most powerful and most important feature of our Tickerflow app. As you can see here, we have an AR chart analysis, which simplifies not only here the technical portion, but we use AI to let us know when to enter and also when to get out of stock. So in this case, I uploaded this overall daily chart here of SOFI stock. As you can see here, I take a screenshot, and you can even take a picture and do it on your phone, completely accessible. And we simply will input here SOFI. And what this does is that we will allow here for overall the predictability of the AI, scans for patterns, analyze the indicators currently that you have on your screen, and it generates the overall insights here. So it's forecasting as well the next session. As you can see here, it's loading, and it does take some time, and our AI sentiment is that the stock is bullish, which it is. Here we see here our predictive forecast. We see a directed range of around towards $24.50 to $26. Our confidence is pretty high here, and it says here as well, prediction rationale. With this current bullish trend and support at the 50 EMA, it is likely that the stock will maintain its upward momentum in the next session. A predicted range of around $24.50 to $26 is based on recent price behavior respecting the ascending trend. It also gives you guys key takeaways here. For example, it gives you that there's a strong upward trend observed with higher highs and higher lows. The 50 EMA acting as a support level, suggesting buying opportunities, the RSI indicating potential for further gains without being overbought, and the overall bullish sentiment supported by those EMAs. So you can see here now, if you want a more detailed AI analysis here and the reasoning as to why it's bullish, we see here a full overall description. So technical trading is going to be easier now, especially with our members have access to Tickerflow AI app. So as you can see here, let's begin with the chart here of SOFI. We'll be doing here an hourly analysis because that is, I believe, the best mix between the longer term and the shorter term is the best mix between both of those worlds. As you can see here, the stock actually did pull back from my last video, and it did find support around the zone around $23 and around 50 cents here. Like I said, the stock, was pretty bullish here, but I said it wasn't precisely the best time to buy yet because the RSI was showing that it was overall being overbought. And what that means is that it gets overextended, right? Showing us that, it's not an opportunity yet to buy the stock. You should allow it to pull back towards key areas of support, which you did have around this $23.50 zone here, which did form confluence with the 200 EMA, which is a very important indicator, which, as we can see, has formed support on previous occasions here, for example, on this date of around 20th of August of 2025 here. Now the stock is seeing some support here, and I would like it to get above, this overall 50 EMA now, this area around $25.50 to be completely bullish on the stock here, right? Which would allow us to form, a higher high here, as you can see, if I just zoom in on the stock. So we did find some support here, right? The RSI is pretty low. It's starting to kind of, flatten out and actually starting to rise. And what I'd like to see here is some type of action like this. So we break above the 50, we see a higher low, higher high, being formed here, and, more upside, and finally, break above that overall area of resistance of supply here of around $25.60, which would allow the stock to go even higher towards the price targets that we have in the stock of $35. Now, as you can see here, the stock has been also holding key levels. So if it does fail this key level, just in case, always, taking risk management into consideration, we do believe the stock will be finding some support at this area of $21.80, and with the third level being of around $20.52 here, obviously depending on the overall macroeconomic news and the sentiment.